Hello and welcome to the Nasdaq market site in Times Square. And with me today, Bill Carpou, the CEO of OCTANE, all the way from Southern California to snowy New York.
In a snowstorm, Jane. Yeah.
Snowstorm, a heck of a snowstorm too, so welcome.
Thank you.
And great to have you here. So I know you've launched a new component of OCTANE, so the Growth Services Program.
Correct.
Can you tell me a little bit about that and what kind of value that adds to OCTANE?
Yeah, you know, there's three components to it. One's in access to capital, the other is operational, and the third is a shared service component. So capital would be really seed and continued growth capital. The operational piece really is intended to prove very much like an operational group inside of private equity and help a company grow. And shared service is more or less back office. So financial closing, accounts payable, receivable, IT infrastructure, all intended to really help the CEO focus on growing the company and not managing the back office infrastructure.
I see. And we all know that entrepreneurs need access to capital to grow. It's like lifeblood of a young company. So what are you doing in that area to help?
So, you know, you're exactly right, and I mean, that's the most critical component. Without it, nothing else matters.
Earlier this year, OCTANE was a founding member of the Innovation Network of Southern California. What is that and how is that impacting the region?
Yeah, this is really exciting, Jane. So we were a founding member along with the Los Angeles Venture Association, LAVA, and the San Diego Venture Group, SDVG. And really what we've done together is take the existing ecosystems that we've had, pull them together, and I think for the first time integrated a Southern California ecosystem as opposed to an LA, an Orange County, a San Diego, and it's really pulled the universities, investors, incubators, and entrepreneurs, and the intent is really to elevate all of Southern California on both a national and a global stage beyond where it's been in the past.
So what kind of impact are the LaunchPad companies making? And what is LaunchPad? So
LaunchPad's our accelerator, and we expect to announce later this year, for 2018, record results for LaunchPad for the year 2018. But cumulatively, we expect to cross the $2 billion mark of helping companies raise capital since 2010, and we will be announcing the launch of Visionary 2. So we've had successful exits already out of Visionary 1, and so we'll be raising capital for Visionary 2. And then we're looking at models that would be similar in the aesthetic space, in big data analytics, in cyber, and in fintech.
Right, so just a couple more questions. So in terms of what you've seen through your years kind of helping young companies grow, I mean, what would you say makes good entrepreneurs? I mean, we've talked a little bit about management team and proof of concept, but is there more personal characteristics that you find will lead to success?
I think it's somebody that's hard driving. There's an aspect of humility that the entrepreneur has to check their ego out the door.
Okay, so they kind of get how difficult it can be.
Yeah, and you know, I think a lot of them underestimate how difficult raising capital is going to be. So they're focused on the idea and not the business component. So what we really look for is coachability. And that's actually, we've had actually very good companies that come through LaunchPad, and we will not select them if we think the entrepreneur is not coachable and is just going to continue to do things in their manner. So that really makes for a successful entrepreneur.
And it seems like persistence too is so key. Like you have to, I remember reading a story about Howard Schultz of Starbucks. Like he talked to like 200 investors before he got his first money to grow.
It's amazing. I mean, it's sales. Yeah. It's building your pipeline and building your funnel. You can't get discouraged from it, but you hear stories all the time of people going out and meeting with 50, 100, 150 different investors. And so that's really what we try and prepare through LaunchPad companies to be able to do. And what's amazing is the seasoned entrepreneur still basically practices on that. So even the individual that's raised capital before spends time and understands how important those first 3 minutes are with an investor.
Yeah, very interesting. Okay, and then finally, what kind of trends are you seeing in the venture capital angel investor world? I know tech is big. What are some other kind of trends?
Well, you know, so some of the trends that we're seeing is venture. Institutional venture has really moved up market, and your angels are kind of below $1 million. So we see a real gap in a $1 to $3 million raise. Okay. Venture generally doesn't want to come in anywhere below that, and even 5 million has become a threshold now. So we're seeing a trend that there's a real requirement, and now you're seeing micro VCs. So a smaller VC come down and be able to fill $2 or $3 million rounds, or private investor networks. And I don't mean angel groups, I mean individuals that are really ultra high net worth, that between 2 or 3 people could fill a $2-3 million round, and family offices. So we're seeing greater participation in that 1 to 3 million, and more active engagement from an operational perspective on some of the bigger venture firms in the performance of the company.
Okay, very interesting. Thank you so much, Bill, for coming.
Thank you very much, Jane, for having me again. I appreciate it.
Great.